um, GM, Base App Ecosystem. Yeah, I mean, Base, we're bullish on Base. Obviously, TMAI is built on Base, but actually, don't tell anybody. But we're looking to possibly, well, we might, we're leaning heavily towards um, migrating our on-chain indices to Hyperliquid, because Hyperliquid has just done an incredible job with liquidity, right? Because it has been um, pretty wild and interesting and great, just kind of building everything out on Base. So our on-chain indices basically allow you to buy tokens across 7 different chains, right? So we take the top 100 tokens based on market cap across 7 chains, 6 EVM chains, which are Base, Polygon, Avalanche, Binance Smart Chain, and Ethereum. And Arbitrum is the 6th one, and then Solana, right? So we take the top 100 market cap tokens across those chains, and every single week we buy them, right? Now, obviously, it's weighted based on market cap. Actually, it's square root of market cap, so there's some exposure to altcoins. But it's basically going to be Bitcoin, ETH, Sol, and all the way down, right? But the great thing is it's non-custodial. That was something we wanted to make sure we built. But to do that, it's more complex, right? And then this is why crypto is so fascinating. The market moves so fast that within a year now, you have a new platform like Hyperliquid that has billions of dollars in liquidity. Let me actually pull up Hyperliquid. Not let's actually go to Let's go to CoinGecko and just show you the liquidity on these exchanges. Yeah, so we'll go to PrepDexit just to the side, right? So there's 8.4 billion in open interest on Hyperliquid, right? Open interest is basically the amount of capital for both long and shorts on Hyperliquid. It's a better metric to use versus trading volume, because if you look at trading volume, it actually shows Ether, which is CZ and Binance's exchange, has more trading volume, and so does Lighter. But if you look at open interest, it's actually a little misleading, right? So open interest, I think, is the better metric to use, because if you look purely just at trading volume, you can have kind of all these crypto shenanigans of trading bots and people trying to kind of game with fake volume and all that. So I would just basically ignore that. Now, if we compare the open interest on actual derivatives, right? Binance is number one with 30.6 million open interest. Bybit is 16.4 open interest, then Gate and so on. But in general, it's actually a lot easier and cleaner. So that's why our team is exploring creating an index of the T100 and all these other indices using Hyperliquid. It would have no leverage. It would just be 1x, basically just not spot, but just 1x leverage. But it makes everything a lot cleaner without having to have all the cross-chain custody challenges happening. So stay tuned on that. It's something we're kind of testing in tandem with the on-chain indices we have. Because if the future goes completely derivative-based, it's going to be kind of pretty wild, I think.